Good morning, everybody. Welcome to today's 1 Million by 1 Million Strategy Roundtable for Entrepreneurs. 1M by 1M, as you know, is the first and only global virtual accelerator for technology startups in the world. We run it out of Silicon Valley with the mission of helping 1 million entrepreneurs reach $1 million and beyond in annual revenue. And in support of that mission, we do these free mentoring roundtables every week. This is the 562nd session. So we started doing these in the fall of 2008. It's been a very, very long time that we have had the privilege of working with entrepreneurs from all over the world, and it literally is all over the world that we have the chance to travel with our various entrepreneur guests. And it's been an incredibly interesting view into what's happening in the entrepreneurial universe of the world. The event is being recorded. Every single recording is available on our YouTube channel, 1M1M Roundtable. And on Twitter, we're at 1M by 1M and at Romana, and hashtag for today's 1M1M. This is a roundtable, not a broadcast. We have scheduled programming early on, but then you're very welcome to participate. So these are the call-in numbers if you want to call in through the audio bridge. Your computer audio should also work. If you want to participate, you should be able to participate also through your computer audio. Today's session is going to start with a conversation with Naganand Doraswamy, Managing Partner and Founder at Ideaspring Capital. Welcome, Naganand. It's great to have you here. I look forward to getting to know you.
Thanks a lot, Ramana, and I'm very happy to be part of your 567th edition of your weekly roundtable, and it's awesome to see that number, and can't believe you have been doing it for that long, and you'll continue to do it for much longer and hit the 1,000 mark soon.
Hopefully, yes. So, Naganand, let's start by having you introduce yourself as well as Ideaspring to our audience, and I'll ask you questions along the way to get more, to double click down on points that we should elaborate on.
Cool. So I grew up in Bangalore and did my undergrad here in computer science, then came to US in '89 to do my master's in Virginia Tech. And post my master's, moved up to Boston and worked for various technology companies. Started with DEC in the distributed systems group, then joined FTP Software, where I wrote the first implementation of IP security for Windows 95 and Windows NT. Then I was with Bay Networks, where I was working in the architecture lab, working on the next generation internet architectures. Out of which we also developed a core router for Bay Networks, because in those days Bay didn't have a core router. So we did that and obviously implemented MPLS as well as part of that. And then the startup journey started in 1999, was a founding member of a startup which was building a 1.6 terabit long haul optical transmission system. 2003.
What was that? Which one was that?
So that company was called Photonics, Photonex. It was started by a couple of scientists from MIT Lincoln Labs and my manager from Nortel, which acquired Bay. So I was there for, it was a lot of fun. We had some 15 PhDs from MIT working on the optics side and a bunch of us on the engineering side. So it was a great learning experience, and it was great to work on that product. We got the product to the market, but unfortunately, as you know, 2003, the entire telecom market imploded. So we had to close the company down, and post that I was trying to do one more startup in the fixed mobile convergence space. Of course, the funding was hard, so tried it for a year, couldn't raise money. So then, for whatever reason, multiple different reasons, moved back to India in 2005. We had our own company where we are doing a lot of product development, and I joined my own company at that time. And we, fortunately, there was an inbound inquiry from a Norwegian company called EDB to acquire us. So we sold some part of the company in 2007 and the rest in 2012. So we exited that successfully, financially successfully. And post that is when, was trying to figure out what next, because I had to do a couple of more years post the acquisition. And as you know, the Indian startup market was very attractive. And, since moving back in 2005, was very actively involved. One of the things I realized that did not exist is there was really no investors to invest in early stage product innovation companies, right? If you look at what is happening in India in those days, 2010 to 2016, 15, 16, there are a lot of companies that are getting funding, which are business innovation, aka B2C, but they're not money funds looking at early stage enterprise companies. And my background was all enterprises, and I was not going to do one more startup after that long a period in being an entrepreneur. Quite hard. And I also have this policy that money without mentoring or mentoring without money, both are useless, because you need to give money, and particularly in early stage, also help entrepreneurs in their journey. And having been an entrepreneur for nearly 20 years, I thought that's the best thing I could do, raise some money and not only give the money to entrepreneurs, but really help them in their journey, particularly in the early part of their journey, helping them find the product fit, helping them get the product messaging, and then helping them build for global scale. And so we kind of said we'll do a fund which will not only give money but also spend a lot of time. So we don't do more than four or five companies a year, but give all we have to be with the entrepreneurs. We are very clear we don't want to take any operational role because we believe entrepreneurs should do that, but be available to them to be able to help them and mentor them in all these various areas that I just mentioned. So that's when we started fund, a small fund. We didn't want to do a large fund, because if you do a large fund, the thesis change. As we talk more, I'll talk about the thesis. So it's been a great journey. We invested in 16 companies in Fund One, and currently we are doing Fund Two. Fund One was $20 million, and Fund Two looking at doing a $35 million, $35 to $40 million Fund Two. That's where we are, and it's been a great.
Okay.
It's been having lots of fun.
And all in India, right? Your geography focus is completely India.
Yeah, so the preference is obviously in India. We have done a couple in Fund One. We invested in a couple of Valley-based startups as well, and the reason we did that was we found a couple of partners who were working very closely with entrepreneurs, like same philosophy that we have, but in Valley. But all those guys had the Indian operations. All the product was being developed in India. So we helped on the Indian side, and they helped with the entrepreneur. The reason we don't want to invest in companies outside of India is for the stage we come in. Really, you got to be close to the founders to help them to be available for them. And if you really invest in a company in the US, you really can't add a whole lot of value. And hence, we believe that for the stage we come in, it is always better to be investing in entrepreneurs in India. And that's the only reason that we have a very strong preference to invest in startups based out of India.
So what is the check size that you like to write that allows you to do this kind of early stage investing?
Yeah. So when we started the first fund, Ramana, we kind of said anywhere around 500 to 750K, the first check that you would write, that would help the entrepreneurs to get to a point where they could show some revenue, and then look at a 3 mil raise. And then we would participate with another 500K in the first, following the first round. So our target was about 1.25 mil per company. Obviously, the second fund is double the size of the first fund. So we're looking at 2.5 total per company. And the first check can be anywhere from 750K to 1.75 mil, depending on the stage of the company and what is the requirement, who else are we funding with, and so on and so forth. So we give in a second fund, we are doing bigger because for two reasons. One, we realized that our companies needed a little bit more runway to show the traction that would be necessary to raise the next round. So we're giving them more money. And also, we thought taking a little bit of 1.25 was too small an amount for us to take some in decisions in companies that need more money. So we are doing, like now in second fund, we are saying 2.25 to 2.5 mil per company. The first check being 750K to 1.75 mil, depending on the stage, but we kind of cap it at 2.5 per company.
So let's double click down on the first check and the stage at which you like to come in. So what you're doing deep tech, are you signing concept checks? Are people coming to you to fund concepts, or do you want to see some amount of work done, and what do you want to see before you're willing to write a check?
Yeah, so our preference is to invest in a company which has at least some POC or pilot going, right? The reason we like to do it is otherwise, for the amount we give, if they have to start from scratch, then it will really not pan out because they will not be able to develop enough of the product or show enough traction in the market to raise the next round. So our preference hence has been always to look at companies where the founders have spent, like say, 6 to 9 months in developing the product, having some early conversations with potential prospects, right? We don't expect them to have revenue, but at the same time, we don't want to invest in a concept because it takes too long, and for the kind of money we give, I don't, we're not sure if they'll be achieved what is required to raise the next round. Because one metric we definitely look at when we invest in companies is when do they have to do the next round, and for the next round to happen, what is the traction they need to see? Because at least today, if you want to do a 3 to 5 mil next round, you need to have some revenues, right? 500 to 750K, preferably hitting closer to a mil. So today is a 5 mil check. So we just want to make sure that we balance that with the amount of money we give them. In Fund One, we only invested in one company in the concept stage, and we wrote a very small check for the founder to kind of translate that into something that is tangible, so that we could do the next round, and that's still going on. But the most preferred one is to come in pre-revenue, but where we can see something, the product working.
And your assumption in the check that you write leading up to the 3 million plus Series A, let's say, what is your assumption? The customers that you're doing deep tech, enterprise-facing deep tech, is the assumption that the customer is going to be in India, or is the customer somewhere else? What are you seeing? What is the assumption based on which you're working?
Actually, if you look at our portfolio, Samara, it's been a combination, right? I think it really depends on the kind of product that our companies are building. So if it's a SaaS, true SaaS, where the annual revenue per customer is anywhere up to 15K, then it is easy to get customers both in India and the US. But if you're crossing 25, 30K per year, then it's hard to convert those customers in the US. So then, we initially get a lot of traction in India. And then potentially before you go to the funding, at least have some conversations going with prospects in the US. Because what happens is, obviously, since all the next round of investors know that you would have to expand in the US, and that's a requirement in most of the cases, that in enterprises, it's still a hard market in India, and it is very hard to build a scalable company just just in India, particularly if you're just a B2B. If you're B2B2C, then there is enough market in India for you to expand. But if it's just B2B, then growing becomes very hard. You can hit 5 mil, but beyond that, growing to 10, 15.
Yeah, no, in general, our observation is that all deep tech companies out of India, B2B enterprise-facing deep tech companies out of India, are going to be global companies. Even the non-enterprise facing, this SMB facing B2B is going to be global most likely. But I guess what we are also seeing, though, is people can validate with customers in India. So they can get a dozen customers, get the product validated, get some revenue, get to maybe even 1 million ARR before coming out to the Valley or to America in general. So and especially in COVID, because you were asking whether I'm meeting people or not, I think the entrepreneurs love the fact that people are willing to buy without meeting them nowadays. And that has really been a benefit for startups.
Yeah, absolutely right. To your point, the sales mechanisms have changed considerably. But I would say that, anywhere up to 350K, you still can do it. But once you start crossing that, then, the sales process still is very different. But fortunately, for most of our companies, you're not targeting large enterprises. There are a couple of companies in our portfolio where you're targeting large enterprises. And those sales are hard to come by. Even in today's world, not being there in the US, it's hard to convert those when you're selling to, say, Fortune 100 or Fortune 250 companies. That's not an easy sale to be made. But if you're selling to SMEs, then I think it's a golden age to sell remotely, and they don't care where you are as long as they are able to product. So that's what we have been seeing. So, and to your point, yeah, I mean, it's India is an awesome playground for people to get their product validated and also get to 500, 750K revenue, because the good news is, the environment is the same, right? AWS is where you're deploying your product, whether India or US or anywhere else in the world. So the environment in which you're deploying your products are very similar, number one. And number two, when you are selling to Indian customers, which is MNCs, many times MNCs are your customers, they become referrals to other parts of the world, so that they become the gateway to the rest of the world. So I think that's another thing that is working to our advantage. And fortunately for us, out of the top Fortune 100 companies, 85 of them have their offices in India. So I think that's a big plus. But nevertheless, even though you're selling in India, sold to MNCs, but when you start selling in the US, they said, do you have any US customers in the US, right? So the fact that you're sold to the offices in India, it helps a little bit, but it's still a fresh sale when you hit the US market. So that's still a challenge.
Now, talk about some of the companies that you've invested in, and at what stage did they come to you? What did you see that made you want to write the check?
Yeah, like I said, if you look at our fund one, Shravana, out of 16 companies, we invested 12 were pre-revenue, right? And the founders come to us in various stages. So our investment cycle has varied anywhere from 3 months to a year, right? When I say a year, reason being, founders have come to us, they have a business model, they have a product, but we tell them, look, we think it has to be a little different. If you agree with us, we are willing to work with you. No strings attached. And if once you get that going, if you want to take money from us, take money from us. Otherwise, you can go find new investors, because we do love working with the entrepreneurs, and it's not every day now. We're not saying, oh, if I work with you, you have to take money from me. We don't have that kind of an attitude, because 20% of our time we want to give back to the ecosystem, right? So hence the duration has changed significantly depending on the stage the entrepreneurs come to us with, right? Well, in couple of cases, they came in early. They said, look, we said we can't invest you at this time, but we will help you in your journey, give you customer connect so you can talk to potential prospects, potential customers. We will give you our thoughts. We will work with you in evolving your idea. So we do that. We kind of stay in their journey. And when they are ready, when we believe they have something tangible, is when we would put the money. So it has been a complete spectrum of time when we have invested in the company. And what do we look for in the entrepreneurs? I guess, one, we definitely, in any company that we invest, if one of the founders is not implementing the product, then we are not investing. Very clear on that, because we are investing in tech, and tech is the moat. And I don't think we can invest in a group of founders where one person is not not building the product, right? So that is what we look for, number one. Number two, obviously,
but in deep tech, that's kind of table stakes, isn't it? Because how else are you going to do a deep tech company if you're not one of the technologists?
Correct. Yeah, so when I say deep tech, deep tech is a very relative. I mean, I consider product innovation more than deep tech, right? So deep tech has a different connotation. So the term I use more than deep tech is product innovation. So where you're building something, it doesn't necessarily need to be deep tech too, because in my portfolio, when deep tech to me is a confluence of where you have multiple different disciplines coming in, right? Like, for example, one company in my portfolio, which I consider deep tech, is Simyog, where they're building a simulation to catch EMI, EMC issues early on in the design cycle. A professor from IISc, confluence of physics, electrical engineering, and mathematics, right? So I think that to me is deep tech. Many companies in my portfolio are great product companies, but I don't know if I can categorize them as deep tech, right? So in those cases, you still could potentially, the founders could have a great product idea, but from one of them, none of them might be implementing that. If it's deep tech, yes, but if it's product innovation, it's a borderline. So that's why in our case, we look for that very closely. If one founder is not building the product, then obviously will not invest. That's number one. Number two, we always look for also, do they have the domain knowledge? There is two different ways to look at it. Sometimes they say it is better to not have any domain knowledge, because then you can be a disruptor. But we go with the thought process that you need to have domain knowledge, because the reason we say that is you also would come in with some customer connects so that you can deploy, get some initial experience of product deployment through your connects. Because as we know, the first few sales always happens because of connects, whether we bring it to the table or the entrepreneurs have because of their previous jobs or journey in their life. So that becomes very important. Third one, like I said before, for the money we give you, for the money you're raising now, where are you going to be in by the time you want to raise the next round of capital? And for that, can you generate enough traction, right? And that's the third thing we look for. And the fourth one, us being a small fund, we want to ensure that we have visibility for 10 to 15 mil in revenue, right? The reason I say that is one of the theses we have in the fund is enable sub 100 mil exits for product innovation companies in India, right? And if you want to get a 70 to 100 mil exit, you should have 10 to 15 million revenue. So that's what our focus is. We don't like, unlike some large funds, we don't say, okay, can you become $100 million revenue company? Our goal is, can you become a 10 to 15 million dollar company? So with that and with great technology, you're always a potential acquisition target. We're not saying you will be acquired, but get to that point. And once you get to that point, our belief is then
create options.
Yeah, you have an option. You either go Series B and go all the way for IPO, or if you believe the market is still not huge, you are being part of another larger company is better for you, then find that fit, and then you can make a M&A to that company, right? So that fork becomes really important in the journey of the company, in the journey for the entrepreneurs. And we stay with our companies till that point, and then if they go Series B path, obviously our fund is not something that can participate in that kind of a journey. So then we'll take a call whether we should exit or exit partially and stay with the rest, or that's a call we take. But if we decide that it is better to exit along with the founders, then that's when we help the founders to exit the company. That's our thesis.
Now, in pursuing this thesis, by the way, I'm very much with you in this thesis. I actually believe that the vast majority of exits, no, I don't believe, I observe. The vast majority of exits are sub 50 million and definitely sub 100 million. And for small funds, I think it's a very good opportunity to do what you're doing. Now, what is your analysis of the maximum amount of capital that you want to raise to support that thesis? So let's say you exit after that Series A point, you're putting in somewhere between 500K to 1.5 million, let's say, and then another $3 million, $4 million round. So are we talking 5 to 7 million maximum capital in? Yes?
Yes, 5 to 8 million. Within 5 to 8 million, I think you should be able to get to that point. And our thought process is, look, for enterprise companies to hit we are saying 4 to 7 years, it'll take us to get them to 8 to 10 million revenue, depending on various aspects, right? But that's kind of the window that we look at. And then if you're able to do it, and should be able to do it raising 5 to 8 mil, that's kind of what we believe is it's a balance.
Wow. So the traditional venture window is $100 million in 5 to 7 years and a lot more capital, obviously. You're saying you want to go from, in 4 to 7 years, you're going to go to 10 to $15 million in revenue.
I find it very hard how somebody can get to 100 mil starting from ground zero, right? If you're starting I'm talking zero revenue, where we come in. Because the typical numbers even people say is 33322, right? That's how we multiply. There might be outliers, but typically, if you take a real case, 3332x is considered extremely good in SaaS, and even in that case, you get to 10 million in 5 years. So that's the kind of numbers that people usually track. So 100 mil in 5 years, they're outliers. It's not.
But yes, they're outliers, obviously. That's why at the beginning, unicorns were supposed to be outliers.
Yeah.
But nowadays, unicorns have become like an everyday feature, and people are just pumping money and getting a $1 billion valuation and calling them unicorns. My definition of unicorn is you do go at this hyper pace, go to in 5 to 7 years, you go to 100 million in revenue, and then you get a revenue-based valuation. That is a real unicorn. These other guys are all fake unicorns, in my opinion.
No, I mean, I tend to agree with you to a certain extent, because if you're raising 250 mil and 300 mil and then, giving away whatever equity in the
Calling
company.
it a unicorn, whatever.
Yeah,
Right.
I think it's, I don't know, it's hard to predict, but there will be some corrections, I would assume, around this going forward. I know you already have started seeing some corrections in the beginning of 2022. And I think you'll see some more corrections happening. But you know, I think probably I'm old-fashioned, so I look at more revenue than anything else, because I think that's how the companies can sustain. Because if you're dependent on raising capital to survive, it's a dangerous game to play, particularly in the
Very
enterprise.
dangerous.
Yeah, so
What about exits? Have you seen exits already? You've been at this for a while now, so you must have
Yeah,
seen exits
yeah,
already.
we have gotten rid of, we exited 3 companies early on for various reasons. So one to IBM, one to Byju's, and one to another company in Chicago, and I manage. But now we are at a point where, like I said, we are starting to hit, five of our portfolio are doing more than 2.5, 3 mil. And now we are, like I said, it takes time and patience to get them to 8 to 10 mil. So we are now looking at some exit. There's one other exit that's happening, which we'll announce next month, where we are doing a 10x return in 2 years, which is awesome. So we are seeing that happen. But we are patient capital. We stay with the entrepreneurs for that period that is required, because building startups from India, trying to sell into the US is not an easy game. We are all getting better at it. And if you look at what the entrepreneurs were doing 5 years ago in India and what they are doing today, there's a phenomenal difference in their ability to sell, in their ability to market, and ability to build products with great user experience, right? Because those are the 3 things that we lacked. We were very good technically, we could build a product, but really not with great user experience, and not having the ability to sell, right? So I think we have learned all that. There's a solid group of playbooks that are being built, that entrepreneurs are sharing amongst themselves. So I think it's progressing really, really well, and next decade will be really fun to watch.
Yeah, absolutely. Well, it's a pleasure hearing you and getting to know about your work and Ideaspring. I look forward to keeping in touch, and I look forward to working with you on something soon.
Absolutely. Look forward. And thanks for having me on your show, and really enjoy talking to you.
Thank you. Thanks for coming.
Thanks.
Maureen, are we ready for your pitch, or were you not able to figure out the technicalities? So since we have people coming from all over the world, we have a lot of technical issues that we take in stride. Ethan is on the phone. All right. So folks, I want to set some expectations about the entrepreneur pitch session. We are on your side. This is a safe working session. So you can be candid. You can just discuss what is it that you want input on, and I'll try my best to give you that input. You can disagree with me. It's your venture. You will steer it the way you want to. It's really up to you. Tonic Audio Labs from Ethan Clift. No, Ethan Clift is the CEO. Tonic Audio Labs is the company. Ethan, could you please unmute your line and get started with your pitch?
Yeah, can you all hear me? Hi.
Hello?
Can you hear me?
Yes, we can hear you fine. Go ahead.
Excellent. Okay. Hi there. So I am Ethan Clift. I'm in Reno, Nevada, and the name of my company is Tonic Audio Labs. Thank you so much for having me.
You're very welcome. What is Tonic Audio Labs doing?
So, so would you like me to go through the pitch first, or would you like me to just okay, here we go. So, Spotify, okay, so how many songs do you think are uploaded to Spotify every day?
Don't know.
1,500, 2,000? So the shocking statistic is that there are 60,000 songs uploaded to Spotify every day.
Okay.
Next slide, please. By over 5 million creators, and that number is slated to only more than double in the next 2 years. So these creators, they spend over $1,000 on average. Media tells us that they're spending $1,000 per year to basically create higher quality songs. Okay, next. So what's the problem here? There's a huge opportunity. We know that there are, 5 million songwriters in the world that are uploading music, publishing it, right? There's another 25 million that either play an instrument or intend to play an instrument. But the problem is that they have a really hard time finishing quality songs. And the reason for that is because it takes two skill sets. It requires structure and creativity. And that is something that almost zero musicians have both of. And so where we come in, let's see. So sorry, this slide is a little early. There we go. Thank you. So what we're seeing right now in the landscape of music technology is that most companies that you've heard of, like the Spotify's, Apple Music, TuneCore, all these folks are really focused on after the song has been produced. And very, very little effort is put into before the song is produced. And so you have 60,000 songs, but most of them are not getting very many plays, right? So why is this market segment ignored? We believe it's because it's really hard to finish a quality song alone. And so, next slide, please. So imagine Simon without Garfunkel. Next. Or imagine the Beatles without George Martin. Next. Or imagine Billie Eilish without a Phineas, right? Most quality songs have an entire network of people behind them that are helping them in various ways to finish those songs and to make them actual quality songs. So at Tonic Audio, we make songwriting painless. And the way that we do this is twofold. One, we help musicians to find other collaborators, trustworthy collaborators. And the way that we do this is somewhat interesting, or somewhat different, if you will. We know that a marketplace requires two sides, right? And the hardest side is really the songwriters. They're the ones that are doing the heaviest lift. Songs take a ton of effort to complete. And then the collaborators, those who want to jump on as maybe a vocalist or just add a bass or add a guitar part, those folks are easier to come by, right? So the way that we've set up our collaborator discovery process is that a songwriter can basically put up a song and ask for auditions. And then it's similar to Tinder where it's like swipe left, swipe right. We try to basically modulate the number of requests that are coming into them. And then the second part of that is that once they find a quality collaborator that they can trust, we give them a secure platform in which they can actually collaborate efficiently together. Next slide, please. So this is, so where are we at right now? We have built the actual songwriting collaboration tool. This is a screenshot of our tool. It has workspaces on the left, you'll see. So musicians can work on multiple projects. And basically it's a project management tool essentially at the end of the day. We like to think of it as GitHub for audio files. And this is an intuitive tool that most of our beta testers understand right when they go in exactly how to use it. There's very low learning curve, and they're able to basically be 10 times more efficient in their collaborative process. Next slide, please. So milestones, I mentioned that we've built out the tooling and collaborative framework, and now we're focused on building out the collaborator discovery. So we're closing a seed round this quarter and just looking to drive growth. And as far as our current pilot that we have running, we have 65 beta testers, and we have what we call an audio advisory board. So these are people that we've recruited who are in our target market and who are collaborating on at least 3 songs a month. And so we're constantly in contact with them on our Discord channel and getting feedback as they're testing out all of our releases. Next slide. So how do we make money? So it's a simple SaaS model, $9 per month for the Plus plan, and then $15 a month for the Premium plan. And the Premium plan adds additional features that we found as we've dug into our customer discovery process that are absolute game changers for them. So things like when they're working in their digital audio workspace, being able to bounce their songs right into their Tonic audio library instantly. Things like watermarking their songs so that they can trust that their music isn't going to be stolen in case a collaboration doesn't pan out like they expected. And then as well as some songwriting assistance tools. So down the road, the AI is not quite there yet. We've been researching it for the last couple of years, and we found that we will probably be adding these features when it gets a little bit better. But things like allowing you, if you're stuck on a chord, allowing you to, the AI assistant will give you an option of 3 chords to choose from that would match the key of the music that you're in. So we have a vast number of products in our product roadmap product feature sets that we would like to implement. And as soon as we get more traction and acquire more customers, we will continue to roll those out. Estimated ARPU is $10.80 a year and $108 a year per customer. So our
where is your TAM?
Sorry, say it again.
So one of the things that I'm noticing is you put milestones and fundraising and goal and all that, but you have, how do you make money should come before that? And TAM, where is the TAM slide, total available market? Do you have one?
Yeah, I don't have a TAM slide, no. I can tell you the total available market is 25 million. Total addressable is somewhere between 5 and 7 million.
So that's a problem, because you should not try to raise money without a TAM slide, and $25 million TAM is too small to raise a successful round. So I'm a little bit nervous about what you are doing out there. So, but go ahead,
okay,
keep
gotcha.
going with your finish.
Okay. So customer acquisition, there's several large online communities of music collaborators that we've integrated with. We found them on subreddits and Discord channels, along with running our own Discord community and podcast called the Remix Project. So essentially the market, where we're at right now is we've found a group of people, we're calling them hobbyists or bedroom musicians. They're all around the world. There's 5 million of them around the world. They're sort of our wedge. So they're where we go into the market. That's not necessarily where we end, right? So our tool we found can be used with several different types of customers. That's just the customer that we're going after initially. These are some testimonials from beta testers. Paula Jones is an audio engineer for the last 30 years, has produced for Elton John and several other musicians' household names. This is C.T. Lee. We found him on the indie music feedback Discord, and they basically are telling us that this is a tool that they need in order to collaborate efficiently. Next. So I'm Ethan, of course. I had a company exit, and I'm an X-Prize semi-finalist, and I went to Columbia as an undergrad. Allison's my CTO. She's a 2-time Techstars alumna and was a top embedded innovator in 2018. Mike Jennings is formerly at Airbnb as the head of global IT. And Alzone is our advisor. He is fantastic at the cold start problem, so I'm working directly with him in the next 2 months to basically acquire as many customers as possible, or as many users rather. And Alex Cornfly is our other advisor. He's been an marketing exec in the music industry for the last 30 years at the top 3 firms. So this is our team, and we're looking for $2 million to get to basically 10,000 MAUs. And this would last us another 20 months and increase our full-time headcount from 2 to 7. We get a dedicated product UX design lead and a dedicated growth lead, and our total OpEx burn would go from $24,000 to $95,000 a month.
And you talk about investment. Is that what brings you here today?
Yes. We just opened up our seed round of funding last week, and we got our first commitment. So that's basically my job right now.
I'll tell you one thing that stares at me in this right off the bat is $25 million TAM is not enough to raise money. So if you are getting commitments, that's great. But there is in the venture world, there is a kind of direct correlation between fundability and TAM, and $25 million is just not enough to raise money in the world that I exist in.
Yeah, you're saying $25 million or 25 million people?
What did you say? You said $25 million, right?
Oh, no. 25 million people. So
okay, so what is your TAM? What is the total available market? The biggest flaw in your pitch is that it does not have a TAM analysis.
Gotcha. Okay. So total addressable market would be, so you're looking for a dollar number for total addressable market.
So a total addressable market is always a dollar number. And it needs to be a bottom-up total addressable market analysis that absolutely is a must for any funding pitch. So do not go out to raise money without that in place. You have to have a bottom-up total available market analysis. That is my number one feedback to you from this presentation.
Okay, that's easy enough. I can definitely do that. Thank you for the feedback.
You're very welcome. All right, well, I kind of don't have any other feedback besides that, because without looking at that, I can't, I can't assess the project. I mean, I have supported a bunch of musicians and their careers, so I know very well the complexity of creating good music, high quality music, high quality audio, and all the collaboration required, the editing, the musicians and the songwriters, the songs, et cetera. So I'm very familiar with the process. So I'm with you on your analysis of the complexity. The other thing missing from your pitch is competitive analysis. I have seen other projects like this at these roundtables where people are trying to do exactly what you're trying to do. But I didn't see any competitive analysis in your pitch either. So there are important sections of a traditional funding pitch that are missing from your pitch deck that you need to address. One is competition, one is TAM. I think the value proposition is pretty much on the mark. I think you understand the workflow and the needs of the musician. That part is great. And I resonate with that because I have experience with helping musicians. But I think as a funding pitch, this needs a lot of work still.
Okay, awesome. Thank you for the feedback.
You're very welcome.
Is there anything else that's missing besides those two slides, would you say? Off the top of my head, those are the two biggest things that are missing. Okay.
There are issues with go-to-market strategy. How are you going to, how are you going to acquire customers? What kind of where are these customers coming from? What kind of conversion rates are you assuming between free and premium? What's free? What's premium? At what rate does free to premium convert? And what is the cost of customer acquisition? These are the things in a large-scale consumer marketing. This is kind of musicians are going to be a consumer marketing kind of deal. So that's those are the kinds of things that it's a consumer SaaS deal is what you're presenting here. And you need to frame it in the context of a consumer SaaS deal.
Got it. Okay. Question. So even in the seed round where we haven't, how can we assume the customer acquisition cost if we haven't acquired a customer?
Well, you are not ready to raise a $2 million round based on my assessment. So I think you're trying to raise a $2 million round without the goods, which would allow you to raise a $2 million round. But you're telling me that you're getting commitments, so that I don't want to discourage you. You know, maybe you're getting it from some people who are passionate about music and maybe people who know you or something. Somehow you are able to get commitments. So I don't want to discourage you. But if you were to work with us, I would not send you to raise a $2 million round without getting more validation on the business model and these. See, the way we operate is we try to validate these metrics early so that when you go out to raise money, people understand what is the business that you're building and what are the metrics of that business. So I don't know how you've spent your seed. You have raised a friends and family round, which is not unsubstantial. It is a substantial seed round that you raised from friends and family. How you spent that round and why you have not validated these things, I don't know. So somebody you seem to have a lot of advisors who are advising you, but if I were advising you, I would get you to work on those things first. So I think I differ in how if you were working with me, I would advise you differently than it seems like how your advisors are advising you. And I'm stunned that you have all these Techstars veterans who don't advise you to do TAM analysis and competitive analysis. These are like table stakes. Those are the basics of fundraising.
Gotcha. Okay, cool. Thank you.
You're very welcome. So folks, I want to tell you one thing, that if you refer 1Mby1M to your friends, please make sure they're serious entrepreneurs who can handle feedback. Like I just gave Ethan very direct feedback, right, of what I see is missing. And I think that's what will be helpful for Ethan to go and, correct course to fill those gaps. That's what we do here, is to really be constructive. I have no malice against any entrepreneur. I want you to succeed. But I want to also make sure that you are improving from your situation so that you can accelerate your journey and not just get, rejects all the time. An entrepreneur's journey is full of no's. So the path to get to yes is a path that is best traveled in the way that people have traveled it successfully. So there's no point missing obvious things in that journey. So I try in my work, I try to protect entrepreneurs from getting unnecessary no's. So here's how you can use the 1M program. You can go to 1Mby1M.com. Everything is there. It's a completely virtual accelerator, so you will find everything at the website. You can follow our blog. You'll learn a lot just by following the blog. The Entrepreneur Journeys book series is a good starting point for learning as well. It's very reasonably priced books. These roundtables happen every week. You can come as many times as you want. You can pitch for free only once, but you can come listen as much as you want to. The full acceleration program is 1M1M Premium. That gives you extensive methodology guidance. You have a full curriculum to work with that will prepare you for fundraising, going through all the detailed aspects of fundraising so that you're not missing anything. We help you in sessions like this that are private sessions for our premium members only. We provide you with mentoring, coaching, strategy consulting, whatever you call it, and you can come to those every week. To the extent the contacts you're looking for are within our Rolodex, we do have a very large Rolodex. You have access to our Rolodex, and we help you with financing. We work with hundreds of investors. So we help you with financing, we make those introductions, and we have a lot of clout in the media, so we also help you get your your work out there so people start seeing that's what you're doing, and social proof starts building up. I will answer questions in just a minute, so please feel free to ask your questions in the public chat, and I will answer your questions in just a moment. I see questions coming up. I will take them in a moment. Let me just wrap this up. The self-assessment, Ethan, you should look at the self-assessment. These are the questions that investors are going to ask you, and you should try to answer these questions in a convincing way. If you have problems answering them, then you can also do the 1M1M basic, which is our curriculum-only option to plug some of those gaps. Our bootstrapping course, it's a free course, less than 1 hour long, is available on the blog. You're very welcome to do that to get a philosophical premise of how we work. We also have a lot of Udemy courses based on the 1M1M methodology that are available for amazing prices. Udemy courses, we have priced our courses in the, $40 to $100 range, and Udemy offers them discounted in the $10 to $15 range. So there's like a two-sided marketplace course that may be relevant to you, Ethan, that you could look up. But for those of you who are trying to learn, there is a lot of learning material that we have released in the last 12 months, less than 12 months actually, on Udemy that are also very good starting points for your learning. If you're an early stage entrepreneur, you haven't done this before, there is plenty of material that we have put out there. 1M1M Basic is one option, Udemy courses is one option. All of that is fine. So go look at the website on what to expect from premium, what to expect from basic, the Udemy courses. There's FAQs, video FAQs, a full description of the curriculum. We teach with case studies. We try to make every point we make supported by case studies. We have worked with thousands of successful entrepreneurs, and they have generously provided feedback on, provided their journeys and their case studies to this effort. So they're all in our network. So if you are working on something that you want to access, somebody in that area, chances are we would be able to introduce you to that person. The investor introduction policy is clearly articulated on the website. Please go through that. If you're coming into the program with the idea of getting investor introductions, please go through that and make sure that you understand what is the investor introduction policy. Our methodology is lean, capital efficient, bootstrap startups. Bootstrap first, raise money later is the policy, is the philosophy. And we believe that don't go to investors as beggars, go as kings. We don't like to send you to investors where you're bound to get no's and rejects. That's it. There are 3 more roundtables in February, 10th, 17th, and 24th is usually Thursday mornings. And now we're open for Q&A. Shrikant Kandragula is asking, can I apply for premium even if I am an idea stage expecting seed investment? You can sign on you don't have to apply for premium. You can just sign on to premium, no problem. We have absolutely no problem with taking you on, even if you're the earliest stage company. The benefit of joining the program early is that if you're working on an idea that is not a good idea, the program will help you validate or invalidate that idea so that you will not be spending valuable months of your life working on something that is a bad idea. So that's, very, very worthwhile actually to join the program early. But please, Shrikant, if you're coming into the program with an idea expecting seed investments, mostly ideas don't get funded. So please don't come into the program assuming that you can get funded just with an idea. That is not what we do, and that is not an expectation that I want to set. So if you want to work on the project and really build up to fundability, we will help you. And when you get there, we will introduce you to investors. But don't just assume that just by joining premium, you will immediately be sent to investors and funding will shower on your head. That is not going to happen, and we don't promise that. If you have questions about how the program works, Irina Patterson is your contact, irina@1Mby1M.com. That is all. I will be happy to take more questions. If anyone has questions, please feel free to ask. I see a lot of people in the room. I'm very happy to take questions, and you're very welcome to also introduce yourselves. What brings you here? Where are you coming from? What are you working on? Please tell us. Please feel free to use this as a networking session as well. Anybody? Questions? Shrikant, I have bootstrapped a product which is in developing MVP, and the other idea is fintech as idea. It's hard for me to tell what is it that you're trying to do. You're welcome to come and pitch at one of the free sessions, and I will take a look at it and give you more concrete feedback. You haven't given me enough idea about what you're doing for me to be able to give you concrete comments yet. Pranab Jha is saying, my first 1M by 1M, thank you for this, Romana. You're very welcome. Glad you came, and I'm glad you found your way to us. How did you find us, by the way, Pranab? And Shrikant, how did you find us? Crystal Foot is saying, thank you for your help you're providing. The Udemy courses are incredible. Oh, Crystal, you came in through Udemy. That's great. Pranab Jha has found us through Dr. John Mullins' course on Coursera. Great. And Shrikant is from LinkedIn. Okay, fabulous. Good to know. Good to know. We have actually released a wealth of information on Udemy, so I hope you guys are benefiting from that. That is an unbelievable price point at which we've made this project, this kind of courses available. I never thought that would be possible, but we have achieved that, and I'm in our democratization of entrepreneurship education mission, this is a big step forward. Anybody else? Questions? Shrikant, as early as next Thursday, you're welcome to come and pitch to me, and I will give you more direct feedback. Crystal is saying, I look forward to speaking with you in the near future about my startup case study. Great. I look forward to seeing you at one of these roundtable pitches. Please do sign up. Anybody else? Here's one, just a second. Let me open this up. Pranab Jha, I have a bootstrap startup in industrial IoT about to get first revenue in the next few weeks. I'm trying to develop technologies in energy space in India, graduated with PhD from University of Houston, now based in India. Okay, now, so it's an IoT project, right? You're not doing energy, you're doing IoT in the energy space, which we can help you with. We do everything that is tech or tech-enabled services, but we don't do clean tech, we don't do biotech, and so on. So everything that is within the realm of IT, like we do healthcare IT, we do ed tech, we do prop tech, we do IoT in clean tech, all of that is fine. Shrikant will sign up and discuss, actually confident to proceed with you. Very good. Thank you, Shrikant. Please do sign up and we will talk. On Wednesday, there is a Wednesday morning, usually Pacific time is our private roundtable. So if you sign up before that, just, Maureen will schedule you right away for a discussion on Wednesday. And Pranab, you can also, if you like, if you want to just come in and just join the premium program, we can get started next week. Crystal, same to you. If that's what you want to do, you're welcome to do that also. Anybody else? Any other questions before we adjourn? Yes, no? All right, folks. I will adjourn for now, and I will see you next week. Some of you at the private roundtable, and some of you at the public roundtable. Bye-bye. Take care.